Hi there, good morning. You're watching Market Cafe with me, Snehi Shah, and with me is Lisa Fernandez on ET Now. Now, this is a show where we take you through all the important global cues, the global stories that you need to be tracking, what the US markets did yesterday, how the Asian markets have opened up today. And in the second half of the show, we'll also focus on domestic themes and look at all the stocks that you need to be keeping on your radar, the stocks that brokerages are pointing out for you this morning, and along those lines. So, a very good morning to all our viewers and a very good morning to you, Lisa, as well. Now, let's start the show with the global handover. And Lisa has been tracking what the US and European markets did in trade yesterday. So, Lisa, take us through whatever happened.
Well, yes, first of all, good morning to you, Snehi. Good morning to you, all you viewers. So let's start with what the US market did. So the US indices, they rose higher amidst weaker than expected economic data. Now, the weak data actually suggests that the Fed Reserve could soon be done hiking with the rates, and that has boosted the equities. Talking about the jobs data, the ADP added around 1,77,000 jobs in August. They missed the estimate of around 2 lakh. And talking about the GDP growth, that was downwardly revised to 2.1% from the previous 2.4% forecast. So weak data coming in from the US economic data. Talking about the indices, well, Dow Jones, it added around 37.57 points, or we can say at around 0.1%, and even Nasdaq Composite, it advanced 0.54% to finish at 14,019 points. S&P index, that also gained for the fourth straight day. So actually the gains that helped all the major indices to trim their monthly losses for the August month. And tech sector, that was bolstered after Nvidia announced partnership with Google. Apple was also up around 2% after it announced a September 12th launch, and it's expected that iPhone 15 will be unveiled at the launch event. The US initial jobless claims as well as the core PC price index, that will be that's slated for release, and it's an important gauge for inflation that Fed tracks. And after the Wall Street, it gained for the fourth straight day. Stock futures, they are trading flat. So that was the US handover coming in. But talking about the European market, it closed mixed after the economic data from Germany as well as Spain. Spain reported flash inflation. It was up 2.6% year on year for August. That was in line with expectations. Germany reported a 13.2% drop in imports year on year, and this is the sharpest drop since Jan 1987. So that was basically the US as well as the European market handover. But talking about the crude and commodities check, Snehi will take us through that.
Absolutely, Lisa. Well, a lot is happening on the crude front, and oil prices gained on Wednesday as US government data showed tighter than expected crude supplies, while concerns about the Chinese economy limited gains. On Tuesday, both benchmarks rallied by more than $1 as the US dollar weakened after soft jobs data reduced the likelihood of further interest rate hikes. Now, Brent was at that $86 per barrel mark. Meanwhile, you had WTI crude also hovering around that $81.7 per barrel mark. Now, US crude inventories fell by 10.6 million barrels in the last week to 422.9 million barrels, and the Energy Information Administration data showed on Wednesday. On the other hand, analysts in a Reuters poll had expected only a 3.3 million barrel drop, and investors also kept an eye on Hurricane Idalia, which came ashore as a Category 3 storm on Wednesday morning in the Florida region. Now, this was expected to damage the Gulf region a little bit, so we'll see how that pans out. And elsewhere, analysts are expecting Saudi Arabia, which is the world's biggest oil exporter, to extend its voluntary output cut into October, keeping oil supply tight. Meanwhile, the military seized power in Gabon on Wednesday, which could hit the country's crude supplies and tighten the market further. In an update that we've just been getting, we have reports that are saying that Gabon's mutinous soldiers say that General Brice Clotaire Oligui Nguema will lead the country as the new head of state. So maybe if this brings some stability in Gabon, we could see oil prices easing, but let's see how that pans out for oil. Now, let's look at China also. Lots of geopolitical action that's coming into play when it comes to crude. Now, Chinese refiners are poised to boost diesel exports in September to more than 1 million metric tons, drawn by lucrative margins from selling overseas and as they expect to receive more export quotas from Beijing. So that's all the geopolitical action that you're seeing on the crude front. Lots of action coming in. So we'll see how crude settles going ahead. Meanwhile, let's also shift focus and talk about gold. And now gold has hit its highest in nearly a month on Wednesday, as a fresh batch of weak US economic readings reinforced the view that the Fed may have to hit the brake on interest rate hikes. Gold has come in at $1,973 per ounce, so that's where gold is at. Largely, this is the crude and the gold handover coming in, Lisa.
Well, thank you, Sneh, for taking us through the crude and commodities check. But let's look at the events that lined up for today. The India GDP as well as the India fiscal deficit will be slated for release today. On the IPO front, Aeroflex Industries will be listing on the exchanges, so watch out for Aeroflex. On the corporate action front, we have the monthly as well as the weekly expiry taking place today, and the MSCI adjustment will happen today.
All right, and with that, let's also look at some global stories that we've been tracking for you bright and early this morning. And the US GDP increased at a 2.1% annualized rate last quarter. That was revised down from 2.4% pace reported last month. Now, the US economic growth was revised lower to a still solid pace in the second quarter, but momentum appears to have picked up early in the third quarter as a tight labor market underpins consumer spending. The economy grew at a 2% pace in the first quarter, and it seems to continue to push ahead despite that 525 bips worth of interest rate hikes from the Fed Reserve since March of 2022. Now, as of now, Wall Street seeing mixed trade. We also spoke with Manish Singh, the Chief Investment Officer at Crossbridge Capital, and Madhvi Arora of MK Global on their views on the US GDP numbers coming in. Listen in to what they had to say.
The economic conditions in the US are tightening. And when those lag effect of high interest rates are going to hit the economy, that's when these concerns are going to become very, very real. I mean, look at the yield curve inverted, well, probably over a year ago, or at least a year ago. It doesn't mean that you have recession immediately, because historically, if you go back and look at data going back 1960s, then it takes between 14 months, sometimes even 2 years, for recession to start once the yield curve has inverted. So it's not that recession has been abated. So far, it is staying away.
India's recovery post-COVID has been driven disproportionately by exports. In fact, exports growth was, contribution of that was as high as 40% plus in the last 3 years or so. And it was not just goods export, but even services export, which was a big, lever for overall growth for the economy last year specifically.
Well, I think that the most important piece of data from this revision was that the core PCE numbers also got revised lower. And what we saw from yesterday with the lower than expected JOLTS number, this market wants any data point that points to less Fed will be celebrated by this market, and that's what we're seeing. We also had ADP private payrolls this morning come in below expectations, and I think as we move into the later parts of the third quarter and the fourth quarter, I think that the focus is going to be less on bringing inflation down, because inflation is coming down. I think the focus is going to be more on what are the costs of bringing down inflation. Of course, less job opportunities, slower consumer spending, and less momentum for servicers on the revenue side.
Well, when China sneezes, the whole world gets a cold. So Chinese private property player Country Garden has warned that it could default on its vast debt, as it reported a loss of around $7 billion for the first 6 months of the year. The company confirmed that it had missed interest payments to holders of some of its bonds earlier this month. Meanwhile, another real estate developer, 1K, also reported lower profit in the first half of the year.
Staying with China, then, however, consumer spending seemed to be back on track in August after a tepid July, as per the China Beige Books survey. Now, all 5 categories, namely apparels, automotive, food, furniture and appliances, as well as luxury, saw a marked increase in sales this month. The services sector revenge spending basket also saw continued strength.
And shifting focus, US government has expanded restrictions on some Nvidia AI chips exports to certain countries in West Asia. The company said that with the curbs which will affect select chips would not have any immediate material impact. Remember, a similar move was also announced last year, which signaled an escalation of the US crackdown on China.
And let's shift focus to some earnings then, because cloud-based software company Salesforce reported its Q2 earnings surpassing Wall Street expectations, sending the shares soaring in extended trading. However, during the con call, the CFO said an uncertain economy continues to pressure Salesforce's growth.
The Biden administration has approved the first ever US military transfer to Taiwan under a program generally reserved for assistance to sovereign independent states. It is said that it would Taiwan's self-defense capabilities through joint as well as combined defense capability, as well as enhanced maritime domain awareness, as well as maritime security capability.
Well, and all eyes will be on Delhi ahead of the much-awaited G20 summit, which is set to be held in the national capital between the 9th and 10th of September, and preparations have picked up speed. Now, Beautification drive is underway in Delhi. 3 high-tech nurseries at Lodhi Road, Madhulya Marg and Pandit Umashankar Marg have been nurturing plants for the upcoming summit. The municipal body said that an area of 43 kilometers in the national capital has undergone Beautification drive. Design of fountains, sculptures, flower pots along the roads have been included as part of the drive. Additionally, approximately 20 sculptures have been installed at 12 prominent localities, along with 11 fountains. Now, Times Network's Riti brings you a ground report from the national capital.
Delhi is all decked up for the G20 summit, the leader summit, which is going to take place on the 9th and the 10th of September. So the Delhi has been beautified, and we are here at one such location at the Akbar and the Man Singh Road roundabout. You can see the sculpture of family of horses behind me, and how it has been beautified with a fountain around it. In the preparation for upcoming G20 summit, the leader summit, Delhi is undergoing a remarkable transformation. The city is embracing its rich heritage and cultural diversity by installing such 20 striking statues throughout its streets. The capital is all set to don a cultural focused look with colorful graffitis, statues of deities, dancing figurines and theme-based fountains across 10 key stretches of the city.
And with that, let's slip into a short break. We'll get back to you on the Asia market check, so stay tuned on the show.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ET Now. Now we're back with the news that GIFT Nifty is currently at that 19,367 level, while we closed the markets, Nifty closed the markets at 19,347 levels yesterday. So not doing much on the GIFT Nifty front, indicating a rather flat start for our markets, but we'll see how that pans out for us this morning. But let's shift gears then and talk air travel. Now August has seen a slight uptick in air traffic, but Indigo has been showering discounts and promotions on its passengers, even as the 2-month forward airfares remain high. What is Somit picking up from these trends? Let's go across to him and understand. Somit, take it away.
Well, if you see the average daily domestic air traffic in the month of August has marginally increased on a month-on-month basis, nearly 3% higher at around 4.1 lakh passengers on a daily basis have been flying. But the trend, the muted trend continues in the second quarter of FY24. The average PLFs have largely remained flat compared to last month, while Brent crude also continues to trade around the $85 per barrel mark, which means that there won't be any relief coming in when it comes to the ATF prices. So overall, the trends are weakish for the aviation industry. Now on the ticket price side, if you see, as per our checks that we did, the near-term pressure on ticket prices continue to prevail. 13 of the top 20 routes have actually seen another decline in the ticket prices, while on the other remaining 7 routes, the prices have remained largely stable. So the yields of an airline company are also expected to come down on a sequential basis. Now, if you see in the month of August, this is for the first time since 2018 that in 1 month, Indigo has come out with 3 different discounts and schemes. The first one was the 17th anniversary scheme, where they were offering a discount of 17%. Then there was the Independence Day offer, where they offered 25% discount, and they also started a scheme, the lowest fare sale, where the prices were starting from 1,515. Now, this has been done by Indigo to run the to fill up the empty seats that the company has been seeing. Now, even Air India had come out with several schemes in the month of August, which clearly shows that air traffic pressure persists in the aviation industry in the month of August as well. Now, what will this lead to, and why is this Indigo doing this? Now, the air traffic is muted, passenger load factors are weak, costs continue to remain higher, while ticket prices also continue to remain on the weaker side. This means that the best of the quarter for Indigo is behind. From supernormal profits in the first quarter of FY24, the company is now likely to report a loss in the second quarter of FY24. However, not everything is weak or bad for Indigo or for the aviation industry. There is still a silver lining, and that is in the third quarter of FY24, which is anyways a good quarter. But given the fact that there is World Cup also, the ticket prices have shot up by at least 50% for major routes, if you see. Now, 14 out of the top 20 routes in India have seen a rise in the ticket prices by around 25% and 7 of the 14 routes have seen a rise of nearly 50% in their ticket prices. Now, these ticket prices are in the month of October and November. Now, the routes which have seen the most hike in the ticket prices, firstly is the Mumbai-Bangalore route, where the ticket prices have surged by around 104%. Again, Bangalore-Mumbai routes have also seen a hike of around 90%. Then there is Delhi-Kolkata, Mumbai-Kolkata, Kolkata-Delhi and Delhi-Chennai, where ticket prices have increased anywhere between 50 to 71%. So, though Q2 of FY24 would be weak for the airline companies, Q3 could still again be a very strong quarter for the airline companies, given that it's a festive season, while ticket prices also continue to remain higher given that there is World Cup and there could be more flying going forward.
Thank you so much for taking us through the August air traffic trends and even the outlook going forward. But stay with us to share your perspective on the MSCI adjustment that will happen today. So several stocks will be in focus today. The likes of PFC as well as Ashok Leyland could see inflows, while ACC and 361 could see outflows. So give us all the details on this.
Made this announcement of changes back while, but the flows or the adjustment regarding the same is expected to happen today on August 31st. Now, these flows are likely to come in the last 30 minutes of trading hour, that is around 3 to 3:30 p.m. And there were around 8 addition, 1 deletion from the standard index, while when it comes to the small cap index, there were 6 stocks that migrated from small cap and 2 fresh inclusions in the small cap index. Now, coming to the standard index, firstly, IDFC First, PFC, Ashok Leyland, REC, Supreme Industries, Cummins, Astral and HDFC AMC are getting included. The flows expected in these stocks are around 158 to 204 million US dollars, which is on an average more than 5 times the 20-day average volume. One stock that is getting deleted is ACC. Outflows are expected to be to the tune of close to 94 million US dollars, which is nearly 5.3 times its average daily volume. And when it comes to the small cap index, on the addition side, we are seeing very smaller names, but the inflows in these stocks will be very small. But compared to that 20-day average volume, the number of shares that could be traded today could be on the higher side. Firstly, on GNTD, if you see, the inflows are expected to be only 2.2 million, but that is nearly 8.6 times its 20-day average volume. Similarly, when it comes to Nexus REIT, Kirloskar Pneumatic, Tamil Nadu Mercantile Bank, ICRA, the flows that could be today, that could be seen today, would be nearly more than 4 times its 20-day average volume. In case of Ather, Tega and Hinware Home Innovations, the flows could be more than 2 to 2.5 times the 20-day average volume. And one stock that could see outflow, and that is 361, because of lower weightage. There is an outflow expected of around 3 million US dollars, which is nearly 3 times its 20-day average volume. So keep an eye out for these stocks in trade.
Absolutely, Soumit. We will be keeping an eye out on these stocks in trade on the back of the MSCI rejig coming. So thanks a lot for taking our viewers to that. But let's get a move on. And according to sources, in an effort to regain ownership of Dish TV, Subhash Chandra is likely to settle the debt taken from JC Flowers for a one-time settlement of around 1,500 crore rupees. My colleague Ankur is here, who's picked up more exclusive details on this. Ankur, what are you picking up?
Yes, sources say that Subhash Chandra likely to have signed a deal with JC Flowers ARC, which could potentially result in regaining the controlling stake in Dish TV, Z-Learn, and his few properties, among others. As far as the deal is concerned, which we understand has been signed for rupees 1,500 crore one-time settlement, and this is for a total debt of over rupees 6,500 crore. Remember, JC Flowers ARC was in partnership with Yes Bank after it was formed in 2022, where all the NPAs of almost over 90% of the NPAs were transferred from Yes Bank to JC Flowers ARC, which also included Dish TV. And as far as Dish TV is concerned, the tussle between Yes Bank and Dish TV was going on over 2 years, where Yes Bank had asked for a board change in Dish TV after gaining over 24% stake, as the firm was not able to clear the dues to the lender, and after that the controlling stake has come in favor of Yes Bank. And now we see that some kind of resolution is in sight, as one-time settlement has been reached out, and now you may see that Dish TV, Z-Learn, all these controlling stake and settlement may happen in favor of Subhash Chandra and his family.
Well, thank you, Ankur, for taking us through those exclusive details. Keep a watch on ZTV as well as Dish TV. But strong response coming in so far for the PLI scheme for IT hardware. That's the word coming in from IT Minister Ashwini Vaishnaw. In this exclusive conversation, she said that there are 32 applicants so far for the scheme. So listen in to the interaction with ET Now's Samir Dixit.
We have received fabulous response, overwhelming response for manufacturing laptops and servers in India. I am very happy to say that Prime Minister's vision for developing electronics industry is really appreciated by the entire industry, and we have received 32 applications. The applications are going to close tonight. This will create 75,000 direct employment, 2,430 crore investment, and additional production of 3,35,000 crore. What's important is what we have seen in the mobile phone industry, our country will emerge as a major manufacturer of PCs and laptops and servers.
Well, Samir also joins in on this. And Samir, what are your sources telling you which companies have submitted bids so far?
The electronics manufacturing industry in India, which is currently growing at a healthy rate of 17%, is likely to scale up many folds with the PLI scheme for hardware. And that is the reason that government is confident that they have received a very good response for the PLI scheme, the incentive-based scheme for hardware sector. Now, this PLI for hardware includes the manufacturing of laptop, tablets, all-in-one PCs, servers, and other parts. And so far, the information shared by the Union IT Minister Ashwini Vaishnaw, it mentions that the government has received 32 applicants or the applications for this incentive-based scheme. This scheme is likely to generate an incremental production of rupees 3.35 lakh crores. Not just this, the incremental investment could be somewhere around rupees 25 or 100 crore. And in terms of employment generation, this will prove to be a success story as well. It is expected that this scheme will have an incremental job creation of 75,000 numbers. So government is looking very confident, and moreover, the bold statement is that the success story which is there in the smartphone segment, the smartphone export which has crossed the 90,000 crore mark, the same sort of success story will be replicated with the hardware part as well. And government is currently is looking quite excited with the applications that it has received, and government is hopeful that when this production will start, when actually the companies will start investing and contributing in the production, then things will look more glossy.
Well, thank you, Samir, for taking us through the details of on the IT hardware PLI scheme. But key macro data points expected over the course ahead. India will report GDP numbers post market close today, and according to economists polled by ET Now, the first quarter GDP is expected to come in at a robust 7.8%. Harsh is joining in with all the factors which will lead to a strong growth in Q1.
Well, Nehhi, thank you. India will report GDP numbers post market close today, and according to economists polled by ET Now, the first quarter GDP is expected to come in at a robust 7.8%. Harsh is joining in with all the factors which will lead to a strong growth in Q1. Well, yes, Q1 FY24 is upon us, and the GDP growth number that most economists are penciling in is an around 7.8% number on the India GDP. Now, with regard to what the RBI is expecting this number at, around 8% is the RBI projection for the India GDP Q1 FY24. Of course, unchanged with regard to the full year FY24 at 6.5%, despite those rate hikes and despite further possible hikes even in the pipeline. No real change to the GDP number for the full year FY24, so that's good. Also, with regard to where the growth is currently coming from, the RBI suggested that services is looking extremely strong as a sector. In fact, over the last 4 months, we've had 3 months where the services PMI has been more than 60. So not just expanding, but expanding fairly rapidly. That's one of the highest PMI that we've seen in almost a decade now. So clearly, services PMI is holding up very, very well, and the RBI was quick to underline that. With regard to other high frequency indicators, we are seeing GST collections also remain up in the double digit number on a very high base, so that's heartening as well. We're seeing direct tax collections around that 13% mark as well, so that as well is quite strong. We're seeing electricity largely flat but growing nonetheless, and we're seeing credit growth also extremely robust. So overall, the high frequency indicators continue to indicate an upward trend in the economy despite the rate hikes, and of course services remain quite strong. 7.8% is where the GDP growth number is expected at year over year, 7.7% on the GVA number.
All right, Harsh, thanks so much for taking us through the GDP preview. We will keep an eye out for those numbers coming later today. But with that, let's quickly slip into a very short break. On the other side, we'll take you through a list of all the stocks that you should be keeping on your radar for today morning. Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ED now. Now, we told you before the break that we'll be right back with all the stocks that you should be keeping on your radar for today's trading session, and we're joined in our studios by Ansh to take you through just that. Ansh, take it away.
Sure, good morning. So Bharat Heavy Electricals will be the first stock in focus for today's trading session, as company has secured an order from NTPC for a 2 into 800 megawatt supercritical thermal power project in Chhattisgarh. The project includes different tasks like engineering, construction and installation of steam generators. Apart from this, Ajanta Pharma will also be in focus as company gets final approval from US FDA for Topira Mate extended release capsules. The launch is set for 1st Feb 2026 or earlier based on certain conditions. DCX system and ELTA system are working together to create special technology for trains. They want to make sure trains can detect obstacles using radar and optics. Moving on to RVNL, company will be in focus as company has secured an order worth 256 crore from Maharashtra Metro Rail Corporation. The project is set to be completed within 30 months. Lastly, Natco Pharma will be in focus as company has made an investment of around $2 million in ISCA for pest control solutions, owning around 5.8% stake of the company.
Well, thank you, Ansh, for taking us through all the stocks that will be in focus today on the back of these announcements. But Vamakshi is here to take us through all the brokerage notes. Vamakshi, good morning. I believe there are notes coming in from JP Morgan as well as Bernstein. Take us through all those notes.
Well, yes, let me first start off with Maruti Suzuki. We have a note coming in from JP Morgan, and what they've highlighted is that they're expecting the stock to outperform its peers in the coming 2 months. In fact, channel checks are also suggesting that the wholesale volume print should be strong, and that in turn could lead to market share gains as far as Maruti Suzuki is concerned. Apart from that, they also believe that a strong SUV mix could lead to the company posting a margin surprise in quarter 2. And in fact, beyond the festive season, they remain cautious on Maruti Suzuki as the competitor launches could start again. So all in all, a few positive factors, a few negative factors. JP Morgan is maintaining its neutral call, but nevertheless, they've started a positive catalyst watch on the counter. Apart from that, we also have Cipla on our radar on the back of a note from Bernstein. Now, of late, there has been speculation about the stake sale in Cipla, and largely they've come out with a report on that. They are maintaining that Cipla is a fairly well-run organization, and in fact, they do believe that Blackstone rather, will have to get creative as well as spin-off businesses in order to unlock meaningful value. Torrent, on the other hand, who is also set to have a fairly complementary portfolio with leadership, and as far as Torrent is concerned, they believe that the portfolio overlap is manageable. As far as Torrent funding this acquisition is concerned, they will require nearly 20 to 25% of promoter stake dilution, a consortium of PE investors as well as some debt. So all in all, Bernstein has maintained its outperform rating on Cipla given a target price of 1,262 rupees per share.
Alright, Vamakshi, thanks for taking us through that. Maruti and Cipla, we will be tracking these stocks in trade today, but it's a new kid on the block, and Aeroflex Industries, which is all set to debut on the stock exchanges today, will be in focus. Now remember, the Ashish Kacholia-backed Aeroflex Industries IPO was subscribed 97 times in total, so we can expect a strong listing, but we'll see how that pans out today. Let me take you through a little bit about the company. The company manufactures green supplies and green metallic flexible flow solution products. Now let's see the key products. It manufactures hoses, exhaust connectors, EGR tubes, expansion bellows, as well as compensators. Now more about the company. The portfolio includes 1700 product SKUs. The manufacturing facility they also have in Navi Mumbai. And followed by that, let's look at the IPO snapshot then. And the total issue size is for 351 crore rupees. Fresh issue out of which will be 162 crore, and the offer for sale will be worth 189 crore rupees. Now, the IPO market cap will be at 1,396.6 crores, and post issue the shareholding will be at 66.9%. Why are they doing this IPO? What are the objectives of the issue? Well, the main objective is debt repayment along with funding working capital requirements. Also, let's take a look at how this IPO fares versus peers. Let's look at the peer comparison. While Aeroflex is at a 40.9 times P2E, price to earnings, compared to Parker Hanfin at 26.1 times price to earnings, as well as peer senior PLC trading at 35.3 times price to earnings. Well, with that, let's keep with the India strategies, and Jeffrey has also released a note stating expectations of seeing capex and housing upcycle this decade. Winnie is here with more on that note. Winnie, good morning. Take it away.
Good morning. And yes, talking about Jeffrey's India strategy, one, obviously they're talking about the election in May 2024, where they believe that political continuity is most likely the outcome, and that will augur well, especially in terms of the key theses, which are going to be in terms of the upcycle that they're seeing in the housing segment, as well as the capex upcycle as well, and that is from the current over the current decade as well. So yes, that thesis coming into play will be something that will drive the higher GDP growth, as well as will be an attractive in terms of market returns as well. Other than that, they believe that the potential market volatility ahead of the election should be used to add domestic cyclicals is the highlight coming in. So when we see a volatility just ahead of the elections, that is the time one should add domestic cyclicals is what the Jeffries is highlighting. In terms of the top picks, they have picked out some of the top banks, that is Axis Bank, ICICI Bank, SBI coming in on the capex front, that is L&T, Ultratech and property segments and stocks are something that they will be looking at. They are bullish on select industrial mid-caps, whether you look at a Thermax, KEI, Siemens or Kajaria Ceramics are something that they are positive on as well. And tactically, they're overweight on staples running up to the elections. They expect that to actually start going up as well in terms of consumer staples. They believe that the housing upcycle will play out irrespective of the election outcome.
All right, Vinny, thanks a lot for taking us through what Jeffries is keeping in note for India. But with that, I'm afraid we're completely out of time on this edition of Market Cafe. Don't go anywhere. The market will take all the action ahead. But before we end the show, my colleague Anisha held a very special interaction with the MD and CEO of LTI Mindtree, Debashish Chatterjee. Let's get a sneak peek of that conversation.
Well, we have said the 17 to 18% exit rate. That's what we are aspiring for. By end of this by Q4, and we have a plan. We have a very specific program within the organization to improve the margin, and that's why we have made a commitment that 200 basis points over the next 4 to 5 years. We are pretty much on track.
There's also this aspiration of $10 billion, right? Right now, what you're sub $5 billion. When do you see that happening? 2030?
Well, I think it will be before that, but the aspiration holds still. The aspiration is very much there, and again, it's the aspiration of the group, our group chairman and Mr. A.M. Naik, our group CEO, Mr. S.N. Subramaniam. I think they have very clearly articulated this plan, and
they've given you this target that DC you have to achieve this target,
yeah,
right?
I think it is not me; it's me and my team who have to get it done, and I think it's achievable. And if you look at the overall aspiration they have been very supportive in terms of what we have done so far and what we want to do. And I think this 10 billion mark has to be a combination of organic as well as inorganic. And I'm very confident that given the credibility that we have in the marketplace and the credentials that we have, I'm sure we can do it over a period of time.